There are a wide range of structures available to operate businesses. Each structure is built upon different legal concepts and therefore have different regulations and tax implications. When establishing a business, one of the first decisions to make is the organisational or business structure to operate under. The decision is generally based on a range of commercial and tax factors, and the selected business structure or combination of structures should be tailored to the circumstances and the market sector of the business, facilitating the achievement of intended commercial outcomes. A sole trader is an individual who is in business and operating by themselves. The main benefits of being a sole trader include simplicity of activity and limited regulations. However, this structure can lead to difficulties if the individual does not carefully keep their personal financial records separate from those of the business. Sole traders are also liable for the debts of the business they operate, so this exposes the individual to extra risk. A partnership exists when two or more persons come together to operate a business. A formal partnership agreement is recommended to be in place between the partners. State or territory legislation in the form of partnership acts also govern partnerships. Each partner will usually contribute some level of assets, either cash or other resources, to the business. They will also expect to receive a share of the profits, often an equal split, unless negotiated otherwise. While partnerships are reasonably simple with minimal compliance, a key burden is that each partner is jointly and severally liable for debts and legal outcomes. In addition, net income of the partnership is not taxed at the partnership level, but is distributed to the partners and taxed at an individual level. A company is a legal structure that makes it easy for a wide range of persons to hold an ownership share of the business. In most situations, those owners have limited liability, which means they will not be liable for the debts of the company. Companies have a board of directors who are appointed to oversee the governance and operations of the organisation. They are also governed by Commonwealth legislation in the form of the Corporations Act. A company needs to be formally registered, with the registration process specifying the company name, the rules that will govern the company, and its share structure. The additional compliance requirements are based on the company being a separate legal entity, which can hold assets, generate income, and take part in legal actions. As a separate legal entity, the company itself is taxed on its taxable income. Trusts are structures or arrangements that have three main elements: the beneficiaries, who hold an interest in the trust; the trust property, which refers to the assets of the trust; and the trustee, who has the role of looking after the trust property for the beneficiaries. Trusts are governed by a trust deed, through equitable principles established by the courts, and by state and territory legislation in the form of trustee acts. The trust deed clarifies the responsibilities and powers of the trustee in managing the trust assets and distributing the trust income. Trusts can be unit trusts or discretionary trusts. In a unit trust, beneficiaries hold units in the trust in proportion to their entitlement to distributions. In a discretionary trust, the trustee has discretion on the distribution of entitlements to beneficiaries. Trusts are not separate legal entities, and so beneficiaries are taxed on the net income of the trust. However, the trustee is taxed where there are no beneficiaries presently entitled to the income, or where a presently entitled beneficiary is under a legal disability. A joint venture is an agreement between two parties to carry on a business together. The parties pool their resources together with the aim of achieving a specific goal, which they would otherwise be unlikely to achieve individually. A joint venture operates through agreement, where each party shares in its revenues, costs and profit, but where each party is only liable for their own actions and undertakings. To recap, there are many different structures available to operate a business, with each having their own legal and taxation implications. It is important to think ahead to the intended goals and objectives of the business to ensure that the most appropriate structure is put in place.